Welcome back to Money in the Tank, episode 23. And it's been a long time coming, but as promised, we've finally got a crypto expert on. And it's actually a friend of ours from school, or from school, but when we were school age. So Brad Tabone, without further ado, and we've got Jolie here as well. So Brad, do you want to tell us a little bit about yourself and what you're doing now?
Sure. I wouldn't say crypto expert. So I would say that I spend the majority of my time, probably 4 or 5 hours a day at the moment in the crypto world. So kind of I'm learning, but by no means am I kind of like someone that's been there since the start and kind of understands the ins and outs of mathematical equations and economic theories and all the rest of it that are going into these coins. But a little bit about myself, kind of started off my career 10 years in banking, but more to do with like the technology side to banking rather than kind of, Joel side of it, which is, personal wealth. Then kind of left the banking world and kind of co-founded a startup called MITT in Australia. Probably the most prolifically used construction software at the moment in Australia. And kind of seen that grow from the original 4 of us to I think it's about 70 something of us now, and jumped over here to the US back in 2018 to kind of expand Hammertech with another one of the co-founders, Andy. Kind of built the business out here to close to 20 people, and I've just kind of recently exited actually that business myself. From a day-to-day management point of view, kind of handed over the reins to a global CRO who's much better at kind of running that sort of stuff in America than me and understand the American kind of way of thinking. And then dived kind of what was I going to do with myself. And one of my passions was crypto before, and been able to spend the last 6 months, been in it for about 3 years, but really been able to kind of get into it over the last kind of 6-7 months and realize there's a lot more to it than I actually thought. So yeah, that's a little bit of stuff.
Good. Like you're being a little bit humble. You're being a little bit humble saying you're not an expert, because compared to Jolie and I, you are like, you're a giant.
Perfect timing, mate. I'm glad you've exited the other role and you've been able to focus all your time on crypto and impart your knowledge to the pod today. So it's great to have you on. And welcome everybody. Welcome all the listeners and the tankers. Joel Seach, Principal Advisor, Half LFG, and we'll get stuck into the news items today before we throw to Tabone on Speaker View as the man of the hour. So, Arndog, do we want to start off with Rivkins today?
Yeah, all right. We'll do Rivkins and then we'll do some news items.
Sounds good. What do we got here? Renee on politics. Economic prosperity has far more to do with economic cycles than good political policy. And there is no better place to be poor in Australia. They're the two.
That's probably still true, even though that statement was written a while ago. And I feel like that's something that people say a lot about politics is, like if you think about like the Howard government, they were sort of saying that Blind Freddie could get a surplus during that economic boom. So it's an interesting point that Rivkin raises.
Absolutely.
So got a few news items here. The one I wanted to kick off with was the fact that August payrolls for the USA, they increased, but only by 235K. And the consensus opinion was that it was going to be around 750K. And as Brad pointed out to me just before this chat, 2 other items that tie into that is that the unemployment benefits are ending or have ended in America. And I think the mortgage moratorium, so the repayment of mortgages, is also ending. And I think that was overturned by the High Court because Biden tried to keep it going. So
been overturned twice by the Supreme Court.
So that's pretty huge. So very sure that we're going to see a few people in America experiencing some short-term pain, which might have an effect on the markets. And the other item I wanted to talk about was just the fact that as of last night, markets have been closing at red 3 days in a row. So that was all I was going to have a chat about, Jolie. And you had a couple of items as well.
Yeah, mate. It's always good to get the current affairs on job statistics and things that come out of the US, because we do tend to take a lead off the US. But and even 3 days red, it might come off the 7 days black the week before. So always short term. We sort of think it's good to catch up with the new short term, but investing is obviously that medium to long term game anyway. So we've got a couple of things more domestically to start with. Is just the RBA, so the Reserve Bank of Australia, essentially adjusting their they had their minutes meeting the other day in terms of the policy situation with what they're trying to do with the tapering of the QE program. So they ended up maintaining the cash target rate at 10 basis points, which we've spoken about at length for a while that they're probably looking like that'll go into 2024 most likely, or end of 2023. They want to see the inflation rate, which is the cost of goods, sort of stick between a band for a prolonged period of time.
Mm-hmm.
And then they want to continue on their planned QE reduction, but I think they pushed that back. So they've sort of pushed that back from so $5 billion a week to $4 billion a week, but they're pushing that back, and they'll probably decide on that from November. And then added guidance, they'll continue the purchase rate until at least mid-Feb 2022. So they pushed all that back by about 6 months, I believe.
Wait, when you say they pushed it back, Jolly, are they not tapering anymore?
No, so they're going to continue. They're going to continue tapering. So they're going to continue the $5 billion to the $4 billion, but they've just delayed everything to a period of time. So review it November, and then potentially gradually tapering from there. And then they're sort of, the market's predicting maybe $1 billion every time they catch up from there on.
Okay, interesting.
So that's one of the things that came out of the RBA minutes, which we can all keep an eye on. The two other things, which was we got the first
on the inflation side, though, Jolie, do you reckon it's going to be 2024 in terms of with New Zealand saying 2024, and now they're kind of saying they might be even introducing now in 2022?
Yeah,
looked at like July and August inflation figures just came out in like Europe was 13-year high. Southeast Asia 9% high.
It'll all depend on the recovery. I think it'll all depend on how we come out of, Sydney and Melbourne, for example, the two biggest economies in Australia, how we come out of it. And the rebounds previously from when we've come out of lockdown have been quite strong. So, my guess is they'll actually probably bring that forward. I think the market's also predicting that too, that I think the RBA is still coming out saying it's a long way off, but it will be interesting to see, keep an eye on that because, the last thing you want happening is inflation getting away from you. So I think they'll be very quick to react if they do see that occurring.
I think it's the reason. So go on, bro.
I was going to say, only because over here there was kind of like, no inflation issues, don't worry about it. No inflation issues, no inflation issues. Okay, we're getting inflation issues. Okay, we've got inflation. Okay, it's the fastest rates of inflation. It doesn't look like it's tapering off, and
it's adjusted over there too. Like they adjust it. So just for the tankers' benefit, I don't know if you mentioned it, but Brad is in the USA at the moment. It's
sunny California.
Yeah, so I think that's what you sort of touched on it before, Joey. And the reason why I'm focusing on short-term things at the moment is because I feel like a lot of investors feel like there's going to be a crash. And when you're looking at things like the tapering across the world and when they're going to raise rates and how they're giving their guidance as to what's going to happen with this current situation, people are expecting that. So normally I wouldn't be paying too much attention to the short-term things because I feel like there's a lot of it's noise. But when you've got something like potential recession or a crash on the horizon, I think you need to pay attention to it. So,
absolutely.
I agree with that, Arnie, in terms of, the only way to really bring inflation down is obviously for reserve banks to intervene, right? And it's kind of that game at the moment around they don't want to intervene too early in the recovery, but if they let it go, they can't let it go too far. And so, it's going to be interesting when they kind of do intervene, right? And that intervene, the markets don't like intervention and rates going up from an equity point of view. So anyway.
But the other big news item, which is actually very timely, the fact that we've got Brad on this week, Jolly, were you going to speak about what happened in El Salvador?
Yeah, so I was. And the other one, which we could probably send for next week, was just Berkshire Hathaway, which is Buffett's company. So BYD, which is the electric car manufacturer as well. So we might actually cover that off next week. That was an interesting article that when he purchased in, or Berkshire Hathaway purchased in with Charlie Munger to about 10% of that electric vehicle company back in 0809, I believe, and how that's gone for him. It's sort of about a 3,400% return, which is a very interesting story. So we'll bring that up for the pod next week. But yes, given the timely nature of having Brad on in the crypto scene, El Salvador, the rollout of the first country to adopt Bitcoin as legal tender, happened yesterday, I believe it was. So the past 24 hours, because we're taping this on a Thursday, and it's Wednesday in the US there, Brad?
Yeah, Wednesday in the US.
Yeah, so it happened yesterday. So, El Salvador adopting the first country to adopt it as legal tender. So the country is essentially become the first country to do that because their local currency is kaput. It's not really a quality local country local currency, and I think they've been ravaged by inflation on that, and there's all rhymes and reasons around that. But yeah, so the digital wallet being used there, they've sort of incentivized people to do the digital wallet known as Shivo comes preloaded with $30 worth of US dollars worth of currency, of Bitcoin currency. And I think there's an interesting little thing here. Twitter and Reddit users discuss plans to buy $30 worth of Bitcoin en masse on Tuesday to mark El Salvador's law coming into effect, which was interesting, people getting behind it. But then we had a sell-off, so that was really interesting too. So it'd be good to have Brad talk about the sell-off. So sell-off across most crypto that day. There's speculation around different reasons around it, whether it was sort of traders are sort of seeing the mark sort of psychological levels, which 40,000 or 50,000 hits, and then people sell off. And we were sort of talking before the pod today that could potentially come off, in stocks, for example. People get excited about stocks and get greedy, and it runs, and then there's a big sell-off. So that can tend to happen. But without further ado, we can get Brad in now, and we can actually chat a bit about that to start us, and then we'll for this section of the pod, Arnie, we'll do Q&As because you might be able to explain what we've had with Q&As on crypto the last few months.
Yeah, well, let's get Brad's thoughts on the sell-off and the El Salvador thing, and then I will read out the Q&A before the pod actually interview starts, because all the questions we've been saving for crypto directly relate to what you're going to talk about, Brad. So
yeah, definitely.
So what
it was supposed to be Bitcoin Day yesterday. That's what they named it, and everyone was supposed to go out and buy $30, and it was supposed to be one big celebration. And there was a couple of the big kind of like Cardano's founder Charles Hoskinson came out and was kind of a little bit teary at kind of the 10 years in the making in terms of becoming a legal tender in a country. It was always a dream. And I think a few things. The $30 represents 10% of the average wage, so there's going to be kind of mass take up if 10% of your monthly wage is kind of being given to you by the government, just kind of sign up to a government wallet. But in terms of what happened, I mean, as Joel said, no one ever knows anything categorically. But with crypto and the blockchain largely being public, because the majority of them are decentralized public blockchains, you can kind of see things. And I mean, one theory is definitely support bands. So kind of the 52,000 has been touched on, I think, twice, and it's the third time that's kind of hit that support band and been pushed back down. And there's obviously, from a technical perspective, people believe that the more time you touch it and it gets knocked down, the actual stronger the bull run will be afterwards. But you never know. Could be that. You've got the president of El Salvador actually coming out thinking that it was the IMF playing with it, because they haven't been too happy with the country moving away from the IMF's warm embrace and kind of moving away from traditional kind of fiat currencies and support into looking at kind of stabilized things through Bitcoin. I don't think it's that. And in terms of kind of what I'm kind of hearing and kind of seeing from a data perspective and putting the pieces together, it's kind of one of those things where everyone kind of goes looking right and someone else goes left, in that it wasn't the miners, because the holdings by miners, the amount of coins that they're holding as they mine have actually gone up, so that they haven't got rid of it. It wasn't any massive kind of traditional whales just taking profit now that kind of Bitcoin's hit back up at the 50-52 mark. There was, the market actually kicked off with Cardano, so it was about 17 million ADA coins dumped all at once, and then it kind of just went through all the different coins. And I think the biggest statistic kind of that led me to see that is kind of over the last 3-4 weeks we've been on a bit of a bull run, which means obviously the prices of all cryptos, including those kind of altcoins, so anything other than Bitcoin, have been going crazy. Like Solana, for instance, 100 times over the last couple of months. So that's 100x.
What about your chess coin, Arnie?
We'll touch on that at the end.
And so, I'm one of those people that kind of, you see 3-4 weeks of really, really good gains, and you just start, hearing people talk about supply squeeze. So more people are actually staking, which we'll talk about later on, which is proof of stake rather than mining. So there's less coins actually on the network. And so people were looking at bull run, less coins. And what usually happens is people get greedy. And the amount of leverage in the markets, and in crypto markets, you can leverage up to 100 times on some of the kind of international exchanges, and generally 10 to 50 on some of the big exchanges. And so in 3 hours, $3.5 billion worth of long margin calls occurred. And because of that supply shock, it kind of went the other way, which is margin call, not that much support, and not much coins, and it just flew down actually to I think Bitcoin hit 41,000 from 52 at one point. Ethereum went from basically 4,000 all the way down to 3,000.
20%.
And then it kind of bounced back up where, Bitcoin kind of hit its support bands around $46,000 and Ethereum around kind of $3,300, $3,400, which is kind of traditional. So, look, no one kind of knows. Personally, I just think that someone saw the way that everyone was kind of thinking things to go, and they went the other way and probably cleaned up a little bit.
So you're saying a large holder, someone, it would have had to have been a large holder, somehow got the leverage data and knew that people were exposed, and maybe if they were to crash it large enough, couldn't cover and did a big sell-off.
Yeah, I mean, I can go and have a look at the leverage data at any point in time. It's all public information, so you can.
How do you find the leverage data?
Oh, there's a whole bunch of kind of websites that you can go to that basically look at all the exchanges that will show both short and long positions, and so you can have a look at. I can actually probably give me 1 second.
While you're searching, I might just quickly rattle off the Q&As that we most get about crypto, and then we can sort of go from there. But yeah, so the Q&As which we normally get about crypto and which we're sort of framing this conversation around are, how does it all work? I know that's a broad question, so you can do your best with that one. How do you mine cryptocurrencies? How do you then invest in cryptocurrencies? And where do you see the future of crypto? So pretty broad questions, Brad, and I'll prompt you again with the first one. But yeah, the long and short positions.
Yeah, I've just found it here. So just give me. Probably cut this for about 2 seconds, Amy, and then
the other thing as well that was on the article I was reading, it's just an interesting fact, is traders also flag the poor seasonality of potential cause of concern. So that over the past decade, September is the only month when Bitcoin has failed to deliver positive returns. So the token,
last four Septembers have been.
The token fell during the calendar month 6 of the previous 10 years, so losing more than 6% on average. Data compiled by Bloomberg on that one. So that's another interesting little side note there, or side bit.
That's very interesting.
And it's actually something that's taken into consideration a lot by people in the actual community, in that I know people that literally at the start of September with kind of, holdings, let's just say in excess of 7 figures, put, 30-40% of their actual holdings literally just based on that on the sidelines. Because traditionally, Bitcoin is something that traditionally has gone in 4-year cycles. And so every 4 years is linked to the halving of the supply of Bitcoin, and basically the ramp up of how hard it is to mine, therefore the reduction in the amount of coins left over. And what that does is actually put it into 4-year cycles. Can I share something here, Andy? Is that cool?
Yeah, you can be able to share your screen.
Awesome. So 4-year cycles. And basically every halving event is a parabolic kind of upswing. And then it's kind of followed by a parabolic downswing. And then it goes into basically a sideways movement, which people call, that's generally where they will, dollar cost average down and accumulate and then wait for the next halving. So the last halving occurred back in 2020, and kind of we saw that parabolic shift from Bitcoin going from, 6,000 all the way up to 60, and you had Ethereum $300 all the way up to $4,000, right? You're talking about like kind of 10, 12x on those ones, and you saw coins going 100 to 1,000x. And so, Joel, this process, and then the last 3 Septembers have been red as well. And so a lot of people, that just kind of believe that Bitcoin goes on this kind of economic cycle, and that, Septembers are always bad, generally speaking. A lot of people kind of get out of the market. And I think that kind of contributed also to yesterday's, people started seeing it go down and just went, oh no, September, because it's in the kind of.
And for people listening on the pod that don't have the graph in front of them, what's the best way to explain it for the listeners with this graph here that's in front of us? And if the listeners want to go onto YouTube to check it out, it's probably about the 12-minute mark, 10-minute mark.
Yeah. So the easiest way to kind of understand it is the price of Bitcoin, which, Bitcoin makes up about 47% of the market cap, which is 2.2 trillion roughly at the moment of all crypto. Yep. And it works in what's called halving events. And so over the life of Bitcoin, every 4 years is a halving event. And basically you just see a parabolic increase because there's a reduction in the amount of coins that again in mind, and the reduction in the supply, I guess the supply coming into the market, you just see largely a parabolic. And so there's been upswings that occur every 4 years. I mean, this I think goes back. So the first one back in September, October, late 2012 into 13 went up 9,200%.
Mm-hmm.
We then had another reduction, went all the way back down, probably 80-90% retracement. The second one, which is the one that a lot of people kind of got involved in 2017, when it went up and everyone went, oh, this Bitcoin's actually something. That went up about 2,900 or 2,900%, but obviously crashed back down from highs of in the 20,000 US all the way down to 4,000 again. And then we hit the one last year, the 4-year cycle occurred, halved, and then that parabolic increase from kind of 4,000 to 6,000 up to 60,000.
So essentially, Brad, what you're saying is that there's a super cycle that Bitcoin follows.
Yep.
And every 4 years, there's a halving event, which is a catalyst to send the price skyrocketing. And the reason it does that is because there's only ever going to be a limited amount of Bitcoins that could be mined.
21 million.
21 million. And because of that reason, because there's a finite supply, when they do a halving event, which means the miners only get half of what they previously would have, there's going to be less supply entering the market, which means there's just more demand, basically. And that means the price goes up. So that's essentially, in a nutshell, the basics of how Bitcoin works, right? So,
well, it's looked at as a store of value. So there's kind of seven. There's meme coins, which is kind of like your Shiba Inu or your Doge or your Moon coins. But there's kind of 6 main kind of cryptocurrency categories or types. These number one is the one that's most kind of everyone knows, which is kind of Bitcoin, which is store of value. Digital gold, people call it, has a lot of the same characteristics, they say, of gold in terms of limited supply, except for people believe in it. A lot of crypto bulls believe in it more because of its transferability, rather than obviously gold not being the easiest substance to transfer around. Then the second one is kind of smart contracts, which is kind of Ethereum. Ethereum created that. There's a lot of other kind of Ethereum killers that are coming up. And then these other types, which are kind of Oracle payment currencies, which is kind of connecting into the real world. So how do we actually? So Bitcoin's there. It will never be the world currency. So what El Salvador is using at the moment is the Lightning Network on top of Bitcoin, because Bitcoin can only process 7 transactions per second, whereas Visa is 1,700 transactions per second, and so it could never really be a global kind of payment system other than without the Lightning Network. And so there's different categories, and Bitcoin's kind of the way that its supercycle work is based on store of value. So it's a store of value coin.
Interesting.
Very different in utility, because it has no real utility. I mean, El Salvador is using it as a payment service, but really the way the world's moving, you need to increase that transaction per second. You need to, integrate it into smart contracts and the rest of it. That's where your Ethereum and the rest of it is coming from.
I knew this would be a hard question to start. How does it all work? Because there's so many different categories, and I feel like you've done a really good job of explaining Bitcoin, like sort of like the mother coin, if you will, and that's sort of the one that kicked it all off. But yeah, I think, I guess it's a good segue into how does one mine Bitcoin if they want to? Like, do you have information on that, or other coins? Do you mine all the coins? Like, are all cryptocurrencies mined?
Good question. I mean, let's go back to the start. Like, what is a cryptocurrency in like the basic terms? I mean, every kind of legal bill of tender today largely has numbers and letters, kind of like a serial number. Central banks store that serial number. Our banks and credit cards are linked to our names. That means kind of, when we buy something with our credit cards or et cetera, it's, bank knows, central bank knows, government knows. Cryptocurrency in essence, people think of the privacy side of it, but I mean, that privacy side is coming down a lot these days because, we've had, hackers, et cetera, be busted because they can now trace things. They're getting pretty good at kind of, the public blockchain and analyzing it. It's really just a digital currency. And then it goes into, okay, well, what's it used for? That's kind of when we break into all those different categories, because you can have Bitcoin store of value. You can have smart contracts, which is if you do this, then this happens. So, one company at the moment that I'm looking at in Australia is called Settled, and it looks at the settlement of payments between the bank, the builder, and subcontractors, and looking to turn that into a smart contract so that basically the money really never has to touch the developer. The banks will pay automatically through to the subcontractors based on smart contract perimeters being met, right? So that's kind of how it will get out in the real world. Then these payment ones, which is like I said before, ones that actually, how do we actually move from, cryptocurrencies to actually payment currencies? So there's all different types of cryptocurrencies. There's privacy. One of them is privacy one. So the people that want to buy stuff that don't want to be tracked is kind of a category out there for them as well. And so, what is cryptocurrency? It's just a digital currency. I mean, the one is, China's building out their own digital currency. The Fed in the US is doing their own.
Yeah, a lot of the countries are starting to do the digital currencies, aren't they? It'll be interesting to see how that all unfolds as well.
And technically, they're all crypto. I mean, it's just using, digital algorithms and the blockchain to kind of work out how then. There's even people that aren't using blockchains at different kind of services now, like HBAR and stuff, but we won't go into that. Just think of cryptocurrencies as digital money, and then every single one of those coins has largely its own mantra or philosophy, its own economic variables. So targeted inflation rates, these are all the kind of real world things that live inside these coins. But what they're trying to do is obviously coins. There's a white paper that generally says before any sort of project kicks off, what's going to happen. So Bitcoin said, there's only going to be 21 million coins. This is how it's going to be mined. Everything's set up and it's immutable, so it can't be changed. And so, a lot of these things it's not based on kind of governments being able to change the rules around things. It's very immutable. It's kind of safe in terms of what's kind of coming towards you. I'm not saying safe from a risk perspective, because investing in it obviously is very high risk. But going back to your question then, so these coins, and then how do they get created and kind of managed? The traditional way was mining, and this was a concept that took me a while to get my head around, because you're like, mining what? Traditional mining into gold is quite easy. You dig in the ground and you pull up your ounces per ton, and as long as it's economical, you mine. What Bitcoin and the rest of it need to work is lots of processing power. So, I mean, you see the stories around, no doubt, Arnie and Joel, where, Bitcoin today uses more energy than Argentina.
Well, that's one of the big criticisms, isn't it, of Bitcoin, that the energy requirements
highly inefficient.
Yeah,
so it's a highly, and that's why it could never be really the global payment, because it's highly energy intensive. I mean, we won't go into too much detail around the power side to it, but look, roughly 70 to 80% of the power that is actually utilized now that it's moved out of China, and China have banned Bitcoin mining, and so the coal power is largely gone, is using largely renewables, and also kind of excess electricity in the network that would usually go to waste during non-peak times are used as well. And so it's not as kind of environmentally, as bad as they kind of put it out to be, but at the same time, it's highly inefficient. Argentina's electricity supply to run the Bitcoin network. I mean, it's not but so miners are largely the people that are keeping that. So banks have lots and lots of servers that are running their processing, like Visa and the rest of it, and it's centralized, whereas mining cryptocurrencies is decentralized. And so you might have 10, hundreds, thousands, or in Bitcoin's case, millions of people that are using anything from a cell phone to recently a Tesla to, specific mining rigs that are able to basically undertake very, very hard and complex mathematical equations. Mm-hmm. And when they solve one, and, computer power, obviously the higher the computer power, the more chance you have of solving said problem, you get rewarded in a cryptocurrency.
So this is
to attract people to put their computing power behind the network to process the transactions. That's one way to attract them, is to use part of that computer power to mine coins, and then they use the other bit to actually process the transactions, and they take a fee from that. So a lot of miners get a coin mm-hmm. and a fee.
Who pays them the fees?
So the fees come out of the actual network. So I will pay a fee. So if I want to move, I want to go and buy an NFT piece of art, like a rock that sold recently for $2 million. I don't really understand it. There will be a fee, an ETH gas fee that's basically charged. And just like anything with supply and demand, at the moment, that's one of the big problems with Ethereum. I mean, the fee at the moment to do basically anything on the network, because it's whoever pays the most gets in line first. And because NFTs were selling for hundreds of thousands or millions of dollars or tens of millions of dollars, a lot of these NFT people that were printing the NFTs and then selling them were just saying, okay, I'll pay whatever to get my transaction at the start of the queue, right? And so the user pays the fees to the miners. The miners get coins also that just comes from the supply. So, Bitcoin's got 21 million supply. Eventually, the supply will run out. And then they're only going to get fees. And the idea is by that stage, you've built up a huge enough kind of economy and marketplace that the fees itself will kind of sustain, I guess, the computing power that's needed behind.
And Tabone, NFTs, just for listeners out there, non-fungible tokens, like
non-fungible tokens,
like an artwork. So just explain how that works in terms of someone being able to buy the digital version of art. Is that right? And they own that.
Yeah,
own that right
all
then?
sorts. I mean, it's a tokenized asset, so it's a non-fungible. So a coin needs to get minted, and there's only ever generally a certain supply of them, and it's very controlled, and these huge kind of economic models behind it and theory and the rest of it. Whereas tokens, anyone in the audience can just go and basically tokenize, which is using a blockchain. Say Ethereum was kind of the first big platform that supported DApps with NFT capabilities. I would take a piece of artwork, I would tokenize it, turn it into a non-fungible token, which basically gives you, just think of it like a digital code that says you are the only owner of this piece of digital art. Now, that's not stopping me from putting that same picture as my profile picture or any of the rest of it, but it does say that picture, basically turning the digital, hash of that picture into a line of
blockchain code,
kind of unique identification, says that you own that. That is your own. And so it's like art. It's like art in the real world, in that only one person can kind of own the one piece of art, and then it's speculative, right? It's people saying, well, these cyberpunks are the first kind of real big NFTs that went crazy. So they're like, the Picassos of the day, and people are paying $10 million to buy kind of, pixelated art.
It's a good example, like comparing it to art, because people can own original pieces and then you can get a print and people will pay for it. And I know Visa bought a CryptoPunk, which was big news.
Yeah, Visa bought, spent $1.5 million on one of the kind of cheaper CryptoPunks, if you want to say. But I mean, there's lots of teaming up. So the Sevens came out, which was pretty cool artwork, anime style, but was linked to the clothes that each of these pictures were wearing were also going to be sold with the art. So you're getting unique art with unique clothing. And so the tokenization is going to be very, very interesting, the kind of non-fungible token.
Big space to watch. Maybe a separate pod.
I mean, NFTs is its own. It's actually creating its own marketplace. So think of crypto. It's created a $2.2 trillion marketplace. NFTs are actually kind of decoupling themselves from the crypto kind of run and doing their own thing.
I know. I reckon we've added some extra content there, so we might do a episode 30 NFT episode, I reckon.
I would love to do another NFT episode. And just to touch on that, I remember hearing about how potentially music companies are going to be using NFTs in their own business. And I'm excited to see what they do. Like, what potential NFTs can you have from an artist?
Well, music, because anything digital can be turned into a non-fungible token or a unique code. And so there's even plays out there like Audius. I'm invested into Audius, which is a decentralized Spotify.
I should mention, actually, for the tankers, Brad, you use the word DApps. That means decentralized application, correct?
Correct. Yeah.
So we're just coming back to the mining, because that's what we're talking about. We've sort of gone off on a tangent here. So if Joel and I want to start mining today, we've both got computers which have an amount of processing power. Do we just go and download a Bitcoin program? Do I need and is there a central one? Is there many of them?
There's many, right? So just like anything in the world, there's a whole bunch of people out there that have built all different mining software. I mean, you've got CG Miner, you've got BFG Miner. Some of them can only do one cryptocurrency. Some of them can do multiple cryptocurrencies. Some of them, look at power to reward ratios. I mean, these are some of these companies are raising hundreds of millions or billions of dollars to actually create these mining mining centers in Iceland and in the US are probably the two biggest areas of growth.
That's where you start to look at the power usage versus what you're actually getting as an output from doing the mining.
It's literally. I mean, 90% of the cost is power input, or 95%. 5% is like humans and the cost of the actual equipment.
Have you ever had a crack at it, Brad?
Yeah, I mean, you have a little crack at it, and then you realize you haven't got any kind of, in the Bitcoin world, you never get anything like, because of your small computing power, you never get a reward, and you're like, okay, well, this is not so much.
You're going against supercomputers.
Yeah, you're going against people that have basically honed in especially over the last 4 to 6 years. They've really just honed in using graphics cards. So any gamers out there, the reason largely why there's a shortage on graphics cards and the price of them isn't just because of the shortage in chips worldwide, TSMC and the rest of it. The other one is because crypto miners were buying all the graphics cards because it's the way that the computations work. Graphics cards are better at it than your traditional kind of CPUs at kind of going through the transactions. But anybody can mine, and different blockchains will provide different rewards. So some of them will just give you fees, some of them will give you coins and fees. And I guess that kind of, in terms of going ahead, it's really what crypto do you want to do? What's your power input? What's your computer? You can have a play around. It's really, really, really easy to set up. I mean, there's been some, cases where some, 14, 15-year-old kids have just built server racks in their parents' basement and are kind of turning over 15, 20 grand a month by just looking at those power ratios and the rest of it. So, I mean, there's definitely
parents are copping all their power bills.
Exactly. What's my input cost? $0. Mum and dad are paying it.
Exactly.
Yeah.
Dad's wondering why the electricity bill is so high.
So I mean, anybody can do it, and but it's moving away from, at the start with Bitcoin and the rest of it was just you and me and Jolie and some other people and the listeners that would just have it on our computers, right? And it's kind of moving away from that to decentralized, but kind of privately owned and funded companies that kind of are turning out a profit. I mean, some of the big mining companies here in the US are turning over kind of $3 to $5 million a day, just mining Ethereum and Bitcoin. Yeah, so it's big money. Texas is a huge, because obviously Texas is the only state in America to have kind of a decentralized power, so demand and supply within the state. It's a completely different power cost to the rest of it. A lot of them moving into Texas and taking kind of advantage of the down hours in Texas, because obviously the price per kilowatt goes all the way down. And then Iceland is the other one, right? Because of obviously geothermal energy. But I mean, Iceland's now hitting a problem where they're hitting their kind of peak energy usage of what their current geothermal energy, because they thought it was going to be never ending. So they're going to have to build some more geothermal plants.
I was going to say that because you've got Texas, which is known as a hot environment, so they potentially got the ability to use the sun and renewable that way, and Iceland's got the other way around, so cold
geothermal. Yeah,
there you go.
And obviously the cold, so the cold temperatures mean that they don't necessarily can just pump air or water from the outside in to cool the products, rather than in Texas your major cost is just air conditioning
fan, because the computers run hot. So that's a great
anybody can do mining
rundown.
But a lot of the blockchains or cryptos out there have looked at the inefficiency of mining, which is proof of work that you've solved this computer, it's proof of work that you've processed this transaction, and seen the problems with the economic model where gas fees and prioritizing people and all the rest of it can let things get a little bit out of hand from its actual utility use case. So to download a song, it's going to cost you $2 for the song, but $850 to process that transaction. Probably not going to do it, right? And they're moving to proof of stake. And so what that is you stake your coins. It removes them from the blockchain, so remove them from the supply. So they no longer have to, if there's 100 million and things like Cardano have a proof of stake target of 80%, which means 80% of people have locked their money away, kind of like a term deposit, think of it like that. Then there's less coins, then there's less fluctuations, less people dumping the coin, more stable pricing because there's less coins that are just getting traded, I guess. There's less coins to be traded and they're locked away. And so you get an API. So on cons like Ethereum, they're targeting 5-6%. Because they're growing at 3%, and then they're giving you The idea is they're giving you 6%, so you're kind of earning over inflation, the inflation of the coins created by 2-3%. Then there's other coins out there that, like Polkadot and stuff, that are giving you 12%. So there's some crazy returns on those, which, not to be trusted, because anything too good isn't true. But the way that actually a lot of the systems are working is that power saving in costs and fees is no longer, like, miners are actually, Ethereum next year or the end of this year is moving to Ethereum 2.0, which is Ethereum is kind of, I would say the second most known cryptocurrency out there, and the ones the listeners might know. But they're targeting December to move to Ethereum 2.0, which is the end of a series of different kind of developments. But one of them is, the last one is proof of stake, which is actually going to be removing miners from kind of the fee process. Do you think the end
game is to try to create, because we've spoken about it on the podcast before, and you mentioned actually with Bitcoin as a store of value because of the volatility and the transactional ability of it. Do you think that trying to obtain some stability in your coin is sort of the next leeway into moving it towards currency, in towards more of a regular currency? Because you always think of currency, you always think of stability. You don't, your dollar going out to the shops today is going to be roughly the same tomorrow. Do you think that's sort of where they're trying to get to with it? And do you think Bitcoin will ever potentially get there?
Yeah, I mean, look, these are all the questions up for this. Many different thoughts on the process. So one thought of it is, there's a coin out there called AMP. It's probably, I'd say, in terms of a payment crypto, the one, I think there's kind of like 100 Fortune 500 companies are accepting it over here. Massive, massive retail stores and the rest of it are kind of accepting it. You just kind of scan a QR code. What they're doing, Joel, is they kind of hold a holding of all the different cryptos that they support, and they take that kind of volatility out of the equation, in that they say, okay, it's worth this at the point of transaction, right? And they instantly transfer that, and they got fiat, and they will handle the transaction afterwards, because the transaction might take them 10 minutes, but they've already locked in with their holdings between, fiat currencies and cryptocurrencies. They've locked in what it was at that point, and they actually do that processing. So there's no risk to the retailer, because that's the biggest.
So the retailer will accept the AMP in this example, yep, and that'll get transacted at that point into fiat currency.
Currency right at that moment. So they're not holding. Yeah. So they're selling a dress for $200, and they bought it for $100.
And then they accept an AMP, and if they're holding onto the AMP as an example, and it drops down from 200 to 100, then they're making potentially making a loss on that dress.
Like a car, Tesla was accepting Bitcoins, right? And Bitcoin yesterday went down 10%. So
have they stopped accepting?
Yeah, they've stopped it. They still hold it, and they're going back to it. But they moved away from it from electricity fears, and now they've kind of overcome that. But that's the biggest hurdle at the moment, kind of facing its mass adoption from a retail and payment perspective, is that. And so there's one school of thought, which is kind of what AMP's doing. There's another school of thought that the currency, so there'll be multiple winners. I believe in that. There's not just going to be one winner. And that the using proof of stake, which is basically putting up your collateral, and in return they kind of get the authority over your token, and then they kind of reduce the network fees and congestion, and then that stabilizes the coin, because not many people are actually trading it up and down like Forex or fiat currency. It's actually stable, it's locked away. The idea is that kind of over time, over the next 5-10 years, we'll probably get to a point where the general economics will change the price, just like fiat currency, but it's going to be a lot more stable and understood. The third one is kind of like Bitcoin, but again, going back to kind of what Bitcoin is it's more of a store of value. And so, again, I don't think Bitcoin's going to be like gold in terms of it's going to fluctuate depending on kind of economic environments on the outside. It's looked at as a deflationary hedge. And it's a deflationary asset, so a hedge against inflation. And so I don't, it's not designed to be a currency. So kind of, in my mind, it'll be one of those first two ways, which will either be a company like AMP that kind of does the transaction into the real world and has a lot of connection into the real world, does the actual transaction at the time, or we will get some pretty stable.
So what do you think, like a country with like El Salvador that's just sort of backed its cart to crypto to create that digital wallet, do you think they'll inevitably bring on another one that's going to be more of a transactional currency, and Bitcoin will be there just as a store?
Yeah, I do. I think Bitcoin's got the brand, right? Bitcoin's got the and it is the most stable cryptocurrency out of we talk about stable, it goes down 20% in one day. It is the most stable. So if you want a blue chip share, but in the crypto world, it's Bitcoin, then Ethereum. And then all the other altcoins are kind of banded together. And so, I think El Salvador was doing it to kind of create a bit of stability around their currency, right? Like Latin America is known for its hyperinflation issues, Venezuela being one, Argentina being another, and we can go around in circles on that. But I think they're bringing in Bitcoin, to kind of modernize, because, a young president with a big kind of big project ahead of himself. And to kind of bring some branding in and bring a bit of stability. And that's kind of why they are using the Lightning Network. But Bitcoin's think of it like a generation one, right? Cryptocurrency. It was the OG, the original gangster. And then kind of people went, okay, what's wrong with Bitcoin in terms of being able to use it in the real world as a utility thing? Let's build Ethereum. So then Ethereum's counted as a generation 2. And then, couple of the guys, so the 3 main guys at Ethereum, Vitalik stayed. One guy went off and started Polkadot, and another guy went off and started Cardano, which are the 2 other biggest. They're all in the top 10 kind of biggest coins, worth anywhere between 26 billion all the way up to 300 billion in market cap. They all went out there and went, okay, what's wrong with Ethereum? All right, we need to do those things. And Ethereum have kind of trying to be fixing that while they keep going. Whereas these guys stopped for 4 or 5 years, did a lot of thinking, and then have built on top. So it's kind of generation 1, 2, and 3. It'll be 2 or 3. So it'll either be Ethereum or some of these new ones like Solar, Cardano, or Polkadot that will kind of lead a lot of the real world stuff. And I don't think any one will kind of win, because Cardano is huge in Africa and Japan, for instance. Ethereum is known everywhere as like the more expensive one, but kind of the more stable one with the most developers behind it. And you got Sol and the rest of them that are coming up. So I think there'll be, depending on where you are in the world, I think there'll be specific networks that have kind of built and kind of integrated themselves into the fabric of the country that will kind of win everywhere, because it's really about how many DApps or how many decentralized apps are on the network, how many developers they have, how many people they've got actually utilizing the utility. And it's going to be like today. I mean, people buy stuff from Walmart, people buy stuff from Amazon, people buy stuff, and then some people buy it from little digital shops, right? There'll be some big winners, and then there'll be some small ones as well.
That's a really good, that's a good insight into where you think the future of crypto is, which was actually the last question. But I think we might have skipped over the process. Yeah.
So, I mentioned the pod a few weeks ago when the Baron of Bitcoin kicked in, as Arnie liked to refer to me as, by throwing a little bit of cash into Bitcoin and Ethereum, just for the listeners out there, to give them a bit of a ride of the roller coaster with us. I ended up talking about there's major ones, Binance and BTC markets, and then Amber is another one that had a look at. So Binance was eventually where I went into, but and just for listeners out there, yesterday's drop, the Baron jumped in again and dollar cost averaged in, and
nice.
Nice. So doing as I say, Baron. Not as I do or whatever. But yeah, anyway, so
how you make money.
Yeah, as I said, dollar cost in on the drops and just put a bit on the side. As I said, it's not a huge amount of the portfolio, but just to give the listeners a bit of a ride along the way. And general in nature, whatever we're talking today, guys, all these information and coins and tokens, all general in nature. So seek personal advice and guidance whenever you're making investment decisions. Where do you invest, Tabone? What's some of the bigger platforms out there? Because there's a lot of, I guess, quote unquote dodgy ones where you get lose your money. Renowned kind of sites.
Yep. So I mean, look, Binance was, and I think still is, the biggest. But it being the biggest, like any other company in the world that is kind of leading a space that's new, that hasn't been regulated yet, what do regulators generally do when they're starting to look to regulate a new part of the economy? Is they target the biggest, right? So Binance has just been getting attacked. Singapore shut them down for a while in terms of all the banks couldn't put money into them. England did it for a while and then came to an agreement on certain KYC stuff. America had to create Binance US, and then that's been kind of attacked by the SEC. So Binance is kind of, I'd say, the biggest. But the guy that runs it, CZ, and they've brought in a lot of people. They're the biggest They are security-wise great. They've been hacked successfully. In terms of ongoing or future, there's a lot of people that say Binance might, through the different regulation, everyone just attacking them worldwide, and also they're going through the growth pains that they're going through, may not necessarily be one of the kind of tier one brokers out there, but still are. I mean, they offer they've got the Binance chain, Smart Chain, they've got their own coin and blockchain, they've got their own networks, they've got their own. So I don't know where that's going to kind of translate into, but Binance is, safe as houses. Coinbase, which is probably one of the more probably known ones due to it listing on the American Stock Exchange. So Coinbase is completely regulated. It doesn't offer all the coins that Binance does. So, for instance, the Ripple coin, XRP, has got an SEC case going at the moment. They'll remove it from their exchange until that court case is over. Any coins, largely, they won't offer the V chain coin. People think it's because it's the biggest coin in China, and so it's an American regulated company. Who knows? But think of Coinbase as your safe as houses. It is very, very safe. As safe as an exchange can be. So to all the listeners, suggest you, if you ever buy anything and you go into Coinbase Australia and you go out and buy it, it's safe while you don't know what you're doing to leave your money on there, but it's very, very good idea to kind of read up on either a digital wallet yourself, right? Just an extension into Chrome or browser, whatever it is, like MetaMask, or a hardware wallet, even more so. There's a little bit of technical side to kind of transferring the coins from wallet to wallet. There's no one to ring up if you don't transfer it properly. So always do a test first, send $5 before you send anything bigger, and make sure it comes.
You're speaking from personal experience, Tabone?
It's one of those kind of fear factors. Every single time I'm moving, sums of money from one exchange to another, and maybe stake it, right, and get my 12% annual reward. It's that freak out because I, in the past, have probably sent money to the wrong bank account, right? You ring your bank up, you say, hey, look, I've typed it. Like, if you type in a completely wrong one, it bounces back to your account. If I send money to a different account, you may be able to put a stop on it before it actually gets there. There's at least I know who I've sent the money to.
And someone to read.
Yeah, so if you send money to an address that doesn't exist, depending on the exchange, it could just disappear. And if you send money to an address in someone else's, the exchange will clear it. It will get validated against the blockchain, and there's no one to call. It's done. Yeah. So my suggestion is, if you go on to say a Coinbase and you put some money on there, do your KYC, because otherwise they restrict you, I think, to about $75. And you go do your KYC like any kind of know your customer, prove who you are, provide a photo of yourself, your license, your passport, all that kind of information, similar to opening a bank account. 100 points of ID, I think it is in Australia. And for the moment, leave your coins on the exchange. But if you're getting into it, like if it's going to be like something that you do long-term investment, and you, like any investment, you should kind of know what you're investing in and understand it. If you get to that point, I would definitely recommend, first of all, a digital wallet, because it's free and takes about 30 seconds to set up, and then transfer your wallet from the exchange. Reason being, if an exchange gets investigated and shut down by regulators, money could go. If the exchange has liquidity problems, your money could go. If the exchange gets hacked, not likely with the bigger exchanges these days, but there's been cases where $750 million just disappears, and that's your money, and it's gone, and there's no recourse, right? And so the idea is that you don't leave your money on exchanges that you basically are not trading. So anything that you're not trading should come off the exchanges and into your own wallet. But Kraken is another one with a K, not to be kind of muddled up with the Kraken that was supposed to come out in the American kind of insurrection, the Kraken of the court case, or the beast under the sea. But it's an exchange. It's probably one of the most utilized by traders. A lot of different option staking, a lot of different pairing options, and buying options of different coins. And coins, some come onto Kraken more than they do, I would say, onto Coinbase. So Coinbase and Kraken are basically the ones that I personally utilize.
Right. Great answer.
Yeah, that's a really good oversight, mate. I think we've covered off on most things we wanted to ask you. Joel, is there anything else you want to ask Brad? Or Brad, is there anything else you think the tankers, from a beginner to intermediate perspective, should definitely know that we have not asked you?
Yeah, I mean, just a little bits of advice, right? Like Joel said before, crypto is one of those things you can get highly emotionally attached to.
Not the Baron, mate. He's ice cold.
He's ice cold.
Ice in the veins.
Joel mentioned, equities and the rest of it. People can kind of get emotional. Now, I know there are like obviously small cap equities that can kind of have high multiples up and down, and the rest of it high risk kind of equities. For the most part, crypto is, especially the NFT space, is a little bit kind of volatile, I would say. And so just like yesterday, you can see between 20 and 40% gone in one day, in a couple of hours. So you might be sleeping like I was and woke up and just went, oh, there's no kind of the markets are open 24/7. Be aware of that, right? There is no downtime. So it's not like I have to be ready at 10 a.m. for 10:15 and then the market's shutting. It's open 24/7. So it's highly volatile. Don't get emotionally attached. Take money off the table. So use a methodology of like a risk reward. There's a lot of different risk reward algorithms out there that use like 20-day averages minus the 100-day average and kind of come up with a risk factor of 50%. If it's under 50%, you buy. If it's over 50%, dollar cost average. If it's over 50%, you start selling each 10% increment. So go in with a strategy of what you're doing. Be prepared to lose the money. So it's kind of, it is one of those very high risk kind of environments, but high reward. And take a risk approach where you take money off the table as it's going up. And you can never pick, no one can pick, just like the normal markets, when it's going to turn. And when it turns really fast. And so it's better kind of getting out a little bit as you go up and putting that money on the side, because those returns are still generally pretty big. And keep, roughly the thought behind it is roughly keep a third of your portfolio in liquid kind of cash, whether it's fiat or digital currency like USDC, at any point in time, so that when the markets do drop down, you can do what Joel did yesterday. Like yesterday, right? And you can snap up, I was snapping up stuff yesterday, 21%, 22% off what I was dollar cost averaging the week before, because the risk rate was still low, and now it's gone even lower. And so, I would, and the other thing is... Did
you change your dollar cost average amount to Tabone, or did you go in with a little bit extra oomph?
A little bit extra. And then it went down again. I was like, oh. And so you have regrets, right? Yeah. So, and that's the other thing. So two other things. One other thing is crypto, it's very hard not to have the regrets both ways, right? So when you kind of, 20x something, why did I only put that much money into it? And you can get that greed side of that annoyance. You're never happy really with the
like with shares. 20, like with shares, yeah.
Like with shares, right? But at the same time, you buy in and it kind of drops down again, like by another 10%. You're like, why did I buy in? It's just like shares, right?
And then you got sellers regret too. You sell, and it goes up 10 times. You're like, why do I sell? So it's the same thing. So you got to be unemotional when you're dealing with it.
Unemotional, exactly. Be kind of have a strategy, stick to it. And the last one is kind of going back to what you said, Joel, which is it's about time horizon. So unless you're going to be a very technical trader that's trying to day trade and the rest of it, remember crypto is generally 5 to 10 years away from absolute mass adoption. We are in the internet. Like the way that I look at it is, if we're in 1997 or 1998 and the internet's kicking off, and it's huge growth in users, and we're all using our 56k modems, and they're making weird sounds, and we're getting kicked off the internet because someone picked up the phone line, and we're all trying to pitch kind of what the internet's going to be. And, some people are doing some gaming on it with some messaging forums. There's, some people, Amazon just kind of launched a book shop and the rest of it. People were thinking it's kind of stupid. Why would you buy a book online when you can just go to the bookstore to buy it? We're kind of in that phase. No one really knows where crypto is going to, how it's going to function in society, how it's going to integrate in society. I'm a lot more bullish on kind of understanding, I would say, how certain blockchains or cryptos will affect like the logistics market, the financial market, DeFi and the rest of it. But kind of no one knows. We're very at the early stages. And so my thing would be, it's a massive opportunity and probably one of a generation in terms of like the internet, where it's going to, just because of its efficiency and way that it operates, it is going to integrate into life. Banks are all moving over to certain different blockchains and the rest of it, because they understand that DeFi is coming. So the other one is just to take kind of like a long approach to it and understand that there are cycles just like normal markets, and not to worry about the ups and downs too much around kind of the dailies or the weeklies and kind of look, what is a good coin that I believe in over the next 5-10 years, and kind of don't worry about the intra, just kind of look into the future, because I think there's only been like 7 trading days that if you had bought Bitcoin up until the last kind of went over 6,000, there was 7 days out of the last 10 years that if you traded Bitcoin and held it, you'd actually have made a loss. So
that's incredible. That's incredible.
Parabolic growth.
Right.
So yeah.
Well, we've come to our favorite part of the pod, Brad, and I'm not sure if you feel familiar with it, but what we call it is 50-50, this or that, either or, gun to your head. What's your choice? And the reason we do it is because we're highlighting that in life, as in investment, there are different choices you need to make. So we're going to hit you with 50-50. And I've actually got a listener submitted one. But Joey, do you want me to go with my one, or did you have a listener submitted one as well?
Give us the listener submitted one. And I actually thought, because we didn't actually talk about it at the start of this pod, I've written one down just off the top of the head, just in case you didn't have one. But
let's go 2 for 1. Let's hit Brad with the bonus. Yeah. The listener submitted one. It comes from Mark, and this is a classic, boys. It's, what do you prefer, pizza or hamburger? Let's go with Jolie first.
So pizza or hamburger? Probably a good hamburger, to be honest. Like I do, pizza's probably more consistent for me. You're probably gonna know what you get with a pizza. But if I had the choice between knowing I'm going to a really good pizza or a really good hamburger, because I'm just thinking in America, I went to John's of Bleecker, which is the best potentially pizza that I've ever had. Amazing. Have that with some salad, really good meal. Just phenomenal. High rating on Barstool Sports. Shout out to Barstool. But I also went to
8.9.
Yeah, 8.9. And he brought the sign out and everything. And it's such an old school Italian place. And, they get celebrities going there that just wear hats, don't want a lot to be seen, but very unassuming place. So, love that. But then, I had an In-N-Out burger, which is probably one of the best burgers I've ever had. So,
Animal style?
Yeah, animal style, yeah. So I just think in terms of if I was going to have a really good pizza or a really good burger, I'd probably lean towards the really good burger.
Interesting. And what about you, Braddles? Well, and let's just say that for consistency's sake, the pizzas are as good as the burgers in quality.
Well, I mean, it depends on, are you eating out or are you eating in? Really, for me, I mean, if I'm pizza-wise, the better half of me during COVID kind of went through a crazy Napoli kind of pizza bit, and so at home I would say that the pizzas that are created and able to be eaten with a nice salad next door, a bit of tomatoes and balsamic and vinegar, thin crust, delicious. But if I'm out, Arnie, I would definitely be going a hamburger, because I mean, there's a lamb hamburger. I'm dying to get it when we get back into Australia. The Baba burger grilled. These kind of no lamb burgers over here. So,
no lamb burgers. What?
No lamb burgers, mate. They've got bison, they've got beef.
No lamb. I mean, lamb's a very Australian thing, isn't it? I guess, well, for me, boys, I'm going with pizza all day, because I feel like, one, it's just better value for money. You got this big pie in front of you, and then you got the breakfast meal sorted for the next day as well.
There's your balanced macros, though, mate.
Macro, I don't care about macros or meat and pizza, mate. I'm enjoying the experience. So that's me. Well, what's your one, Joel? What's the bonus?
The bonus one, yeah. So I was actually, because we were chatting to Brad about trying to get back into the country at the moment. So any of the listeners out there that have contacts in the high up officials in the US consulate, give Brad a bit of a chop out, get him back to Australia. He's trying to get a flight. I was actually just thinking, flights. What do you prefer? Do you prefer a nighttime flight or a daytime flight? And if the flight runs overnight to day, do you prefer to start with night and finish with day, or do you prefer it the other way around?
Definitely start with night and finish in the day. Being someone that used to travel from America to Australia, which is 14 or 17 hours, depending on the winds, every quarter, every 2 months, getting on the plane, settling on the plane, having a meal, watching a movie, falling asleep, and then basically waking up in Australia and having breakfast. It's the way to go.
Wow.
The body clock works better with it. That's me.
You want me to go, Jolly, or you want to go?
You go, mate. You go.
I like to think the same way as Brad, but in reality, I never sleep well on planes. Like, there's just, I don't know, even if I'm in like the luxury classes, I just struggle with it. So it kind of doesn't matter to me. I would try for what Brad's suggesting, but I always struggle. I end up playing like a video game or something on my phone because I can't sleep.
Yeah.
Like Amy, you stay up for 15 hours and you get off and you're just red-eyed and you're like, oh, geez, you haven't slept.
If I stay up for 15 hours on a flight, I absolutely hate life for a good day or so after. So my aim is to try to, everything revolves around me trying to get some sense of sleep during a flight. So if I can, similar along lines with Brad, I'll plan to have everything set up. I'll have pillows, I'll have my neck thing, I'll be ready to go. I'll aim to sort of go 3 or 4 hours of some reading, watch a movie, listen to something. Then I'll put a podcast on, and then I'll try to potentially get to sleep naturally. If I find it's battling, sleeping tablets come out, kick into gear. And then I'll try to aim to get sort of a good 6-7 hours. If we're on a US flight, for example, good 6-7 hours sleep. I'm loving that. I know I'll wake up, I've got 3 or 4 to go, and I can deal with that. If I find that I go to sleep, I wake up 2 hours later, again, I'm in a world of hurt and potentially hating life again. And it depends on the seat you're on too. Like me, being 6'7", Brad Sinclair would love me throwing out the height again. Emergency exit, premium economy or business. It's if I'm in a normal economy, I'm not sleeping.
Yeah, I feel that. as well. So yeah, Jolly, I didn't even think about your height. You would struggle more than most.
Well, I don't like to give props, but I love that question. So, and I love the answers, guys. Love the answers.
Good one, boys. Well, Brad, I feel like we just scratched the surface. We're going to have you back.
Yeah, NFTs.
For sure.
NFTs.
Getting in chat with mates and talking about things that I like about. So
first repeat guest. It'd be a new member of the team.
I'll make sure that next time I talk about NFTs, I'll drop something else like STOs, and you're like, oh, that's going to be another show. And I'm like, look at that, securitization tokens.
And we love it.
Sure.
All right, let's get Brad back home. Get Brad back to Oz.
Yeah, bloody
hopefully October.
Good, mate. Good. All right, just in time for lockdown to finish. Perfect time for you.
Sorry, I should say, if you want to get Money in the Tank, it's at Money in the Tank, YouTube, Twitter, Facebook, Instagram. And obviously, we'd like to have the comments, subscriptions on the YouTube video. It helps us.
Yeah, and we'll try and get a couple of the slides today, guys, and post them on the socials maybe or on the YouTube page too. And most importantly, everyone keeping well. Hope everyone's going okay. Reach out to a friend in lockdown. And more importantly than that, this Friday night, go D's.
Go D's.
All right, crew.
I'm back. I'm back to you guys. Go D's.
All right, guys.
See ya.
Take care.